Saudi Aramco seeing more than $100 billion in orders for its debut dollar bond sale and is on track to pay less for its debt than the sovereign that owns it. Let's bring in Damian, shall we? Bloomberg Intelligence Chief EM Credit Strategist. So, Damian, can we just begin with something that I want to clear up? The difference between actual demand and an order book. Just what goes in to an order book and why?
Well, I mean, let's just be clear. At $100 billion on what it may be a $10 billion issue, probably toward the higher end $15 billion, I mean, that's 8 times oversubscribed. Just by frame of reference, if you look at Egypt most recently, you know, one of the sovereign darlings this year, they just issued at 4.5 times oversubscribed, and that was a pretty hot issue. That was a euro-denominated issue. So I mean, look, the reality is, there is a lot of demand. There's a scarcity value attributed to it. And look, if you just look at the pricing they're discussing, they're going to price right on top of the Saudi dollar sovereign curve, which is pretty unbelievable. I mean, in the past we have seen companies like, for example, Vale most recently trading through the Brazilian sovereign curve, but after the Bernardino dam burst, you know, that's all kind of washed away. But this would be something, and it would take Saudi Arabia from what is now the 8th largest constituent in EM dollar debt to the 6th, surpassing the UAE and Turkey. So it's quite something, Jonathan.
It's good reason that it's quite something. If you think about it, if it wasn't for the sovereign, this credit would probably be close to AAA. It's going to trade wider than Exxon. If you think about it, just from an investment grade perspective, Damian, it's got to trade tight to the sovereign for obvious reasons. But just in terms of the people that are buying into it, how many people are looking at the demand and saying, you know what, I need to upsize my order because I'm going to get scaled back?
That would be everyone. No, I mean, look at Comcast and CBS, which to date were, you know, two of the biggest, most oversubscribed issues in U.S. dollar debt. So, I mean, look, you know, the reality is, if you just look at how they've traded, you know, I mean, it's going to be something. I mean, there's no question in my mind. I would not at all be surprised to see it at least trade through the sovereign for a period of time until things sort of converge and correct with one another. But I mean, just thinking of the size and what this does to, you know, U.S. dollar debt investors, I mean, it'll be the 5th largest oil and gas issuer in EM dollar debt after Petrobras, Pemex, CNOOC, and Sinopec. I mean, it puts it in very rarefied companies. So yeah, Jonathan, I expect demand to be high, and I expect spreads to tighten to the sovereign.
How much do you think it will tighten up by? It's about 125 basis points over Treasuries. That was the initial guidance for the 10-year maturity. What are you looking for later?
Oh, goodness. I mean, look, it'll probably price slightly under the sovereign. I mean, look, the sovereign's going to have to converge to it probably in the early days. But, you know, look, I can't give you where it's going to come in at. It may come in considerably less. I mean, just look at China when it launched its sovereign dollar debt issues, first time ever last year. I mean, they priced very tight to the order book, to IPT. So, I mean, I wouldn't be surprised to see something similar here.